So in today's video, we're going to be going over a quick day trade that I did in which we made about $1,960. Now I'm going to go over a few different things on this trade. We're going to go over the orders and talk about the actual trade itself, the profit, go over some of the like the beginner topics about the options in case anybody is new here so they can kind of get an understanding of what we're doing with the options. And then we're going to jump into like the whole charting aspect of it and go over what I saw, why I got in, where I got out, my entire plan that I had before even getting into the trade, how I had to adjust the trade and things of that nature. So as you can tell, we have a lot to talk about, so I'm going to try and find the best way to kind of work every topic in. So it might mean we're going to bounce around a little bit. Like I might start by just going over the profit first, then I'll go and show it in the charts, then I might come back over and show the whole entire play, things like that. So just bear with me here, and hopefully you'll learn a thing or two here. So let's first go over the orders. As I mentioned, profit was 1,900 there, and I had a total of 15 contracts. I started with 10, I added in 5, and then I sold all 15 at once. Now I want to jump over to the chart and kind of talk about my trade plan for a little bit with you guys, and then we'll come back over and go over the breakdown of the numbers and the options and things like that on this page again. So here is the chart of what we were looking at. And before we actually get started, let me go ahead and pull up the notes that I had on it for today on my watch list. Let me switch the screen here for you guys. Alrighty, so as you can see, my initial plan was to get short on Meta. You might hear me calling it Facebook. I'm a little old school before they changed the name, so don't, yell at me if I accidentally say, all right, so I was trading Facebook. It's Meta. We were shorting it. Basically, I traded puts, which either way, you want the stock to go down. And the whole plan was to keep an eye on this 325 area here, and I wanted to get shorted, basically, if we broke below it or struggled to get back above it. And my risk was going to be on the 327.50 and a primary profit target of the 320 area here. So first thing to kind of note here is I always have a plan before I get into a trade. If I'm in a trade, there's a plan for it. If I don't have a plan for it, I'm not in the trade. It's if this, then that. And I can't if this, then that if I don't have that plan, if that makes sense. Just like here, if we can break below that 325, then this, then that. So hopefully you get that gist of how you kind of need to navigate in the market if you're going to want to be successful in it, obviously. And the reason that we have a plan like this is because you're never going to be 100% right. And you need to know when to get out if you're wrong, and you need to know when to get out if you're right. And that's the thing with trading, is that it can be very risky. So to kind of help mitigate the risk or kind of operate around the risk, I think is a better way to say it, you have to have things like this in play. So this is also what I mean when I say we're going to bounce around a little bit here. First I show the order, then I show the plan, then I'm going to go into the chart, and then we're going to jump back over to the orders. So just bear with me here. It'll all come together. So let me put you guys back on just this screen here. Make sure I don't need to change anything over here. Perfect. So as you can see, I'm going to put it into a shorter time frame here. This is basically where I got into the trade. There were 2 orders, if you recall, from that monitor tab over there with the 2 entries, first 10 contracts, then I added in 5. Now, the reason for that is because my initial plan was to get in at the 325 area. So the thing is that as soon as the market opened, it just started dropping out. Even in pre-market, it was dropping. And I was waiting it out a little bit to see, okay, can we get like a little bit of a pop back up? And it didn't look like it had that much strength to it. So I said, all right, I might have to make an adjustment on my plan and enter away from my 325 area. So in order for me to do that, I had to start light size. The reason is, there's a reason that we have a plan. There's a reason we were watching that 325 area. So you have to respect that 325 area. You have to only enter based on that 325 area. And the thing here to keep in mind is that if it does come back up to that 325 area, you don't want to have made such a mess for yourself that now the trade is doing exactly what you wanted it to do, but you're at such a weird position in terms of your loss that you're looking at, or your position sizing, or just how you think the trade will play out, then now you have to start making decisions that don't even make logical sense, because now you're going to start exiting the trade around that area because you're reacting emotionally, this, that, and the other. So even good traders get caught up in the whole FOMO idea, because it's not always just FOMO. Now, FOMO is fear of missing out. Basically what that means is that if things are going away from you and you're panicking like, oh man, I don't want to miss it, you start chasing after it, which is not good. But everybody gets caught up in that. The thing is, you have to realize how to properly navigate with it and around it. So the first thing that I did here is I made sure I entered light size. I told myself, hey, I might miss the trade. but I'd like to at least be in it. If I want to at least be in it, I have to go smaller. Am I okay with being in it smaller? Or would I rather miss the trade? You see, you got to kind of talk yourself into it a little bit like that. So that was my first thing, and that's why I only got in 10 contracts right there. Then, as it came back up to that 325 area, which is the second arrow here, and we're going to go back to the charts and go over the orders on it and everything, that's when I added in, and I had a little bit more room to add in. I wouldn't have minded to get to 20 contracts, but I just kind of wanted to add in a little bit here, a little bit there, especially with how like whiplashy it is in the morning sometimes, and it gets real wild. I would rather like add in on confirmation, or at least let it kind of chill out and start to reject that area. And unfortunately, it rejected it so quickly that I didn't have time to add in for like a third time. I only had time to add in the 5 contracts because I'm like, all right, well, we're at that area. Let me get in based on my plan. But at the same time, I don't know if it's just going to shoot through that area. Let me give it some time to start rejecting the 325 area. And then maybe I can add in a little more. The thing is, it just shot right down from it. As you can see right away, it was like within the next candle, the next, like few minutes, it was already right back down to my original entry point. So I said, you know what? I'm in it. I'm fine. We're good to let it go based on our trade plan. Now, it did go below the 320, if you recall from that note that I showed you guys. I wanted to exit right at that 320 area, or at least exit half at that 320 area. The thing is that I made a little bit of an adjustment because of the fact that I entered a little bit lower than my 325. I said, okay, well, maybe what I'll do is I'll kind of do like a raising, or well, in this situation, lowering my stop idea. And basically, if it goes above this area or that area, then I'll get out of it. And that's basically how I had kind of played it right there. I had an alert to ping me as soon as it went below the 320. I was watching it. I kind of let it go a little bit, started reversing on me. I said, that's fine. It didn't really go above my next like little level that I had up there, which was the 322. I told myself I'd get out of it if it did go back above that. It didn't, but when it did drop back below the 320 area, this is where I said, all right, you know what? I already got a little bit greedy on it on this end. Let me just get out of it right now. My trade plan worked exactly how I wanted it to work, exactly how I like put it in my little watch list note there. And I had a perfect entry, for lack of a better word. I got a little out of hand here, but in terms of like looking at it from like a technical standpoint, it did exactly what I wanted. I got in, maybe not my first entry, but I did get in at the 325. So I said, you know what? It was a perfect trade. Just let it go. You're already close to the end of the day. At this point, I kind of told myself I'd probably need to hold it overnight if I did want that additional move. So that's why I decided to cut all of it. And that's basically the trade from the whole charting aspect of it. Now, what I want to do is bounce back over to the whole orders, break that down for you guys real briefly, and then we'll come back over and do one last shot on the charts here to hopefully kind of like summarize it all for you guys, and maybe it'll make more sense once you've seen it on the option side of things, and that'll basically wrap it up for us here. So, first thing to note is that we were trading puts. So puts means you make money when the stock goes down. So as the stock went down, the value of our put went from basically $3 to $4.75. So it was around $3 here down to $4.75 here. Now, obviously, it could have been more if I was still holding it, but that's not what we focus on as traders. You have to understand that these things are going to happen. The next time you start adjusting yourself based on the fact that, oh, it could have been more, well, then you're going to end up having your trade reversing on you, and it's going to be even higher than you got in. You're going to be looking at a loss, wishing you did this, wishing you did that. Just remember, if you are going to deviate from your plan and say, well, last time it did this and last time it did that, then just remember, maybe cut the trade in half, lock some profit in, and then go based on like a secondary profit target idea, or on an idea of basically lowering or raising your stops depending on if you're on the upside or downside. In this situation, we would have been lowering the stops. But that's the point that I'm trying to make here, is that make sure you are fully like conscious and fully aware of what it is that you're doing. Don't just make one adjustment without making another, and things of that nature. So I'm going to take you guys back over here. This is where I first got into the trade as it was flushing out in the morning. So I basically paid $3.64 for it. Now, anybody that's new here, the way options works is 1 is equivalent to 100. So 1 is 364. So obviously I had 10 of them. So that was 3,640 that I put into the trade initially. Then as it went up to my 325 area, that's where I added in an additional 5, basically right at 300 each. So if I have the calculations here, the total cost of the trade was about $5,165. Basically, you add the cost of this and add the cost of that, and that's where we get the $5,165 is the total cost of the trade. Now, to make it a little easier to understand for people, I always try to say, look at it like a used car. Pretend you went out and you bought a used car for like $5,000 and you think you could sell it for $7,000. That's exactly like what we're doing here. That's what I sold it for, was around 7,125. If you do the math here, you can do 475 times 15, and that's basically where you're going to get the 7,125, subtract the cost of the trade, which was the 5,165, and that's basically where you have that $2,000 difference, 1,960 to be exact, if you guys wanted to do the math there. But like I say, think of it like a used car. If you buy a used car for, let's say, for example, $5,000, and it goes against you, for example, I'm kind of going to bounce back and forth between a car and a stock. Let's say it goes against you, something you were wrong, the engine messed up, it blew up on you, something went wrong, right? Or you were wrong with the model you picked, maybe you picked the wrong model, whatever it is, you don't just leave the car on the side of the road and say, all right, well, that's it. That's why you have a plan. You can get out for a loss, you can put a little bit extra in terms of the car scenario, fix the problem, sell it, or you sell the car for a little bit less than you got in for, and you move on to your next flip, if you will, like a car flip, if we use that example. So hopefully that helped you guys understand how we kind of use these options as a way of trading these stocks and these stock shares. Obviously, if you wanted to trade the shares on this, you would have had to have shorted it, which is really risky. We'll go into that in another video if you guys want. But you would have had to have had a lot of capital in it, especially if you would have wanted to have a profit like this of 1,900. I'm not trying to say you can't go in and short one share, but you know, what are you going to do? You're going to short it at 325, get out at 320. That's a $5 profit, and you're not really doing anything there. But I'm also not trying to put down the idea of trading shares, because it definitely does have its perks and where it comes in handy to be able to do so, because not all things have options. Sometimes options get a little bit weird, a little bit, you know, depending on certain times, like for example during earnings, things like that. So we'll get more into that in other videos. I don't want to start rambling here. I just really wanted to go over this trade and kind of show you guys a little day trade, trading options to the downside, and kind of show you how it worked out based on the plan, and how I even had to make a little bit of an adjustment based on my plan. So hopefully you guys enjoyed the video. As always, please hit the thumbs up, subscribe, all that good stuff. And if you have any questions, please let me know. Send them over, make a comment, however it works these days, and I'll catch you guys in the next video.